This is the video for April 8th, even though it's 12:03 a.m. right now, so it's the 9th, but this is a video for the 8th. And today we're going to be looking at three different pairs, but before we get started, quick risk disclaimer. So foreign exchange trading carries a high level of risk. Before you decide to trade foreign exchange, we encourage you to consider your investment objectives, your risk tolerance, and trading experience. It is possible to lose some or all of your initial investment, so don't invest money you can't afford to lose. Seek advice from an independent financial or tax advisor, and all information provided in this video is for educational purposes only and should not be construed as trading advice or counsel. So let's get started. Here is a chart of the US dollar Swedish krona, which is a pair that I do look to trade. I like trading opportunities out of the krona. It is a pair that's kind of traded a little bit less, so technical indicators aren't quite as effective. So for the krona, I do like to look at more overbought and oversold signals. It respects those levels pretty well. So again, just examples of respecting levels is RSI under 30, strong move up, RSI above 70, and strong move down. So these overbought and oversold indicators are good for any market. So Swedish krona is one of them. So a couple things that I see out of the Swedish krona this week are, first of all, extreme over allocation on the long side. So basically we've been oversold on the RSI, and usually I like to see a retracement down to at least the 40 in the RSI in order to say that it has made a correction. So we have had extremely small corrections from the RSI and even smaller ones from price. So as you can see here, we have some bearish divergences, and the price is closing higher while the RSI is closing lower. So the highs here are lower highs, and the highs of price are higher highs. So that's a divergence, and by definition that's a bearish divergence. So I will be looking to the short side for the Swedish krona this week. I think that long covering will begin to happen up here as some of the longs down from 6.59 are started to cover, and we should see a pretty sizable correction to the downside. Targets I'll be looking for, first is this level is going to be extremely important. The close is at 6.69, and if we do see a retracement down to this level, this is going to be around the 50% retracement, a little bit above it. And so this is going to be another buy zone for me between the 38.2 price here and the 50%. So we should see one of these act as support for this pair. But until then, the risk to the downside is going to be a lot less than the risk to the upside, just because we have had such a significant move already. So like I said, I do like us move down from the Swedish krona this week. That's going to be coupled with the euro dollar, which I also see as pretty oversold right now. We have, again, three divergences that are opposite, because this is a pair that usually trades opposite of the krona. So again, price is closing lower and the RSI is showing higher lows. So that's a divergence, and it's by definition a bearish divergence. So I think that the euro might have a little bit more to run. We could see RSI go back down below 30, but the risk to the upside is definitely a lot less than the risk to the downside. So I do like a push up from the euro. Again, I like I said in a couple of the other videos, I do believe that the euro is in a downtrend, but for now, over the next couple days, I think that oversold conditions should push this pair back to the upside. Buyers will remain in the market for quite some time, and the shorts haven't quite started to panic yet. So again, like I said, the euro should be in for a pretty sizable move to the downside over the next months, but for now I do like at least at the beginning of this week into Wednesday a push to the upside. So a couple levels I'll be looking at for the euro to draw a quick Fibonacci. I will be looking at the, again, 50 to 32.8, 38.2, sorry, is looking a little bit more visible here as potential resistance. So we do have the closes up here at around 1.3155-ish. And that also coincides with the 100 moving average and the 200. So if we do see a push up there, that's about almost 100 pips. So that is a nice little trade. And I think that eventually we will push up to those levels, if not to the 50 and maybe even 68, 62.8 retracement. The last pair I wanted to take a look at is the Swiss franc, which I want to take a little bit of a longer term view on. I threw up a blog, I guess it was sometime in November, saying that I believe that this pair was in for a long-term push to the upside, and that worked for a little bit. We did see a push down from 50 around 0.86 to around 0.95, almost 0.96. So we did see a strong push to the upside from the Swiss franc. And as you can see, we have had a little bit of a correction down. If I throw in a Fibonacci of this move, we did push down to the 61.8, and we have pushed back up from there. So in terms of the Swiss franc, I do like a continued push to the upside. My bias for this pair is going to remain net long, even though we have been in a pretty significant downtrend of late. I think that remaining above this 200-day moving average over the past few months is a strong indication to me that there are a lot of buyers for this pair. Because if we were going to break down, we would have done it on one of these tests. So we have been able to push much higher, and I think that we could continue to see a push from the Swiss franc in the next couple of years. So a couple things that help confirm my bias is looking at monthly charts. We again have a bullish divergence on the monthly time frame, which are going to be very important. And we also have been in strongly oversold territory for quite some time. This move did see a push down all the way down to 20 for the RSI, which is pretty big for monthly charts. You don't usually see that oversold conditions at that level for monthly charts. And as you can see, we closed lower in price. This is back in 2008, March 2008, and this low is in August. So we did close lower in price and have a lower or higher low in the RSI, so that's a bearish divergence, and push to the upside looks like it may have just begun. Long-term levels I'll be looking at is definitely the 100 moving average, and that's a 2,000 pip trade, so great potential from the Swiss franc. It'll be choppy action all the way up, but I do believe that we will see that, especially with euro weakness and some numbers coming out of the euro and the US dollar, which are definitely pointing to the downside for the euro and upside for US dollar pairs. So those are a couple levels I'll be looking at. Longer term Swiss franc trade. If I do throw up a Swiss franc blog or video, I could be predicting again choppy moves down. I do like predicting pullbacks a lot, because I think sometimes pullbacks can give you more profit potential than the creation of money. The destruction of money is also extremely important. So I do like to trade both sides of the market, and my bias for the Swiss will remain up and my bias for the euro will remain down, but that is going to change a lot intraday and intraweek. So those are a couple levels I'll be looking at, and thank you very much for watching. If you want to follow us at SynergyFX during the week, we'll be posting updates, and good luck trading.